Bring me out.
Hey guys, how's it going? Starting basically on time for once. 3 minutes late. We figure we wait up. We've got a lot of people signed up, and even more people. I mean, it's a pretty crazy group of people tonight. Got over 130 people on. So thanks for tuning in, guys. So we got Max Chera over here. Um, I don't know how much promotion we did on him, so I'm going to let Max talk about himself for a minute. I know you guys are going to enjoy the next hour, so take it away.
All right, you cut off a little bit, so I didn't hear exactly what you were asked. You asked me about the same about myself, but I'll just introduce myself the way I normally would. So, my name is Max. I've been in real estate now for about the last 10 years. Pretty much started from the bottom in rentals, moved my way up to sales, and from sales started investing, started doing some flips, buy and holds. Now we have a hard money firm called Express Capital Financing. That's my bread and butter. So we pretty much look to help investors grow their and scale their business with our experience, our money, and guidance, and pretty much all the tools that they already have as well, whether it's their wholesaler or whatever it may be. We work very well with everybody because that's what real estate pretty much comes down to. So it's pretty much a short summary of my story.
That's great. That's great. So Max and I, we've known each other for about a year. I met him last summer. He was throwing this crazy rooftop party, but it was more of a, I guess, more of a, like a lead agent, right, more than anything else. Um,
Pretty
and
much.
I like the way you did it. I thought it was super cool. I'm not sure how I even found out about it. I think one of my colleagues told me about it. Probably one of the best things I've seen in the real estate biz. You want to talk a little bit about that?
Yeah, absolutely. I mean, real estate is all about relationships and really meeting people, getting to know them, talking to them, and understanding what their goals are. Because at the end of the day, I could talk today till tomorrow about something, but if that's not what you want to do and you have no intent about doing it, it's just not going to be interesting to you. So that's why our goal was really to get as many people together and get them to talk. How are we going to get people to talk to each other? We'll put them in a comfortable environment, which is pretty much at a bar, somewhere that they just feel comfortable drinking, talking to their friends, and making it a very social interaction. I'm sure many people have gone to similar networking parties and things like that. And, honestly, that's one of our, strongest parts that propelled our business forward
Was it
is just been
networking event?
just networking, talking to people consistently. And it's not just doing it once, it's doing it consistently.
Yeah, because you run it. I want to say monthly, right? Was that
So
what you were doing?
Uh, so I'll tell you like this. So I try to do as many different things as possible. So what I do is I do our own events that we do once a month. I do other people's events, and I also co-sponsor events with people. So sometimes we'll just throw them in there. So I mean, my calendar has an event every single day of the week, and it's a matter of how much I'm willing to push myself that week is what I can do.
Really, really. So let's we're gonna kind of jump all over this. We're getting a little bit ahead of what I wanted to talk about, but what are you doing now with the pandemic? Because like I think the last event I went to yours was probably somewhere in like December, January. Um,
Yeah. December,
so
January, February,
supplement,
there were still one or two going on, but it started to really fall off. And
yeah.
then March
Are
was
you
just
doing something to supplement it?
Yeah, so we're actually doing a lot of different things to make sure that we're still getting that networking going on. So we're doing webinars. I'm pretty much on a webinar, I'd say now about 3 times a week or so, making sure that I'm still giving that value, still being able to talk to people, connect with them in a different way, as well as I've been spending a lot more time on Facebook too. Facebook has been really good to me, and it's if you use it, it's good. But if you let it use you, you'll just get stuck scrolling for days, and that's not what I mean by using it. So like I'm
So yeah,
talking in
why don't
groups.
you dive a little bit deeper in that the using it part?
So yes, I'm diving into different real estate groups, just connecting with other investors, seeing what they're doing. Like me and you talk all the time, and whenever we talk, it goes further into like strategy and what you're thinking about in the market, where we get to really get to know each other. So I'm doing the same thing on these groups where I just reach out to people and say like, hey, what are you doing currently? Do you have any deals that you're looking to offload or sell if they're wholesalers? If they are investors trying to see, hey, what do you need in your business today that can get you to that next level, whatever it may be. So groups on Facebook, letting one-to-one meetings, FaceTime meetings also. Now that we can't meet with people face to face and really understand their needs and goals, we'll do a FaceTime call like, hey, like we're doing right now. It feels a lot more comfortable. You have to know the person.
Yeah, the thing, like I remember the first night I met you, I kind of just like bumped into you. You're like, hey, what's up? I'm throwing this event. We probably said 5 minutes, traded contact info. You have an amazing follow up game, best in the biz, I gotta say, even better than mine. All right, and I have a pretty good one. But back to that, so back to the event, like I felt like, because I'll tell you one thing about your event, I must have met 30, 40 people at night, right? And that to me is successful. Like, what do you have? 200 people there? I mean, I don't even know what the head count is, but it's up there.
I don't even, that was one of our best events, honestly. We had a lot of people. I would say it was plus of 250. I don't know if we hit 400, but we had a
Uh-huh.
lot of people there.
Yeah. So now, are you getting that type of exposure during the pandemic?
Well, so the interesting thing now is that webinars actually allows you to connect a little bit differently, which is actually a little bit of an advantage. And what I mean by that is I get to really, first I just talk, right? Which is everyone gets to know me a little bit. But then
Yeah.
afterwards, I can actually speak to every single person that attended my webinar. But when I'm at a networking event, like I got lucky that I was able to bump into you and talk to you because there were
Thanks.
250 people there.
Yeah.
Well,
Yeah.
what I mean by that is there were 250 people there, and I had 2-3 hours to really connect. That means that I'd only be able to spend a minute with everybody if I really wanted to get everybody and some time to get to know everybody. Whereas now I can actually call you and spend an entire day having a full conversation with you.
Yeah. Yeah. So that goes into your follow up game because I remember, I think you called me at least once a month since I met you, minimum. You know, right? And you're always good. And I'm the same way, right? Like if you hit the ball into my side of the court, I'm gonna call you back, right? So you'll
Right.
either hear from me, email, something like that. But you're great at it. You really are. So you're hitting up like. So let me ask you this: why you can't be hitting up everybody once a month, right? Like you
I
gotta have.
wish I could.
Yeah. So that's what I'm saying. How are you getting to hit me up every once a month? Am I like super special or something?
No, not really. So it's really all about how well, I mean, you are special.
Yeah.
You're a good person, and it's always a pleasure speaking to you, which makes it easy to call you. But no, it's not that. It's really just a matter of systemizing yourself. So if you don't already have a CRM, get a CRM, right? That's
Yeah.
step number one. That'll help you drastically. If you were originally talking to people once every 5 years, now you'll speak to them once a year guaranteed. But you
Yeah.
still got to make those 12 touches. And how are you going to do that? So what I do is I set every day on my calendar certain times. From 9 o'clock till 10 o'clock, I'm only calling new leads. People that I just spoke to yesterday, they hit me up about something and they're interested, and I never had a conversation yet. And then I have my
Yeah.
10 to 12 where I go through my old ones. But now my old ones are all filed accordingly. I have people that I need to speak to weekly because I have those clients that do so many deals that they need me to speak to them every single week with an update, finding out what happened with the deals and so on and so forth. I have my bi-weeklies, I have my monthlies, I have my quarterlies, I have my yearlies. So
Yeah.
I put everybody appropriately because not everyone wants to be bothered by me every month. If you're not investing right now and I called you every month, I am the most annoying person on the planet Earth.
Yeah. Yeah,
So
no, I feel you. So you like the CRM manager now when you're talking about, like you said, you've got people because so you're not just a sales rep, dude, because I feel like you're everything, right? Like no, I mean really, because I've worked with you now, and because most of the time in your business, right? At least from my perspective, you got a guy who's meeting you at the event that's like, dude, I can give you $1 million. And I'm like, really? I have no credit. Yeah, don't worry about it, right? This is a guy just throwing stuff at the wall, seeing what sticks. Then he gets to the next guy, and the next guy's like, okay, we'll take all your stuff, we'll see what happens. They pass it on to the next dude, and then from there it goes to the underwriter. So by the time you get to the underwriter, like, there's no way in hell we're gonna give you money, and you're like, yeah, but the first dude, like, I feel like you're there the whole way. You're accountable. So when I don't get my money, I'm like, Max is the dude. You know, like
right.
where the other stuff is like always some song and dance. So now you're bringing in the client. You're kind of massaging them, putting in all their stuff. Then you're walking them through the deal. So I mean, you're doing the whole thing. You may even be the close mass the underwriter back there that the mysterious guy that no one ever knows. Who knows? Um, But like, so is that you in a nutshell?
That is me in a nutshell, but I wouldn't be able to do that without my team. So
Okay.
it's that's number one. Like without them, I can't do that. So all I do is really keep each party and each person in the process accountable. So in the beginning, I am the person that's bringing in the deal. Let's say, right. So I'm talking to you. I'm making sure that that everything that I'm doing for you is going to go to the next step and not have any questions. Because if questions come back, that slows down everybody, me, you, and my people.
Yeah.
So I have a full file ready to go that has no questions or audit. It goes to my next person. Now, just because it goes to the next person doesn't mean that Max doesn't have to do anything at that point. Max still checks in. Hey, what's going on here? What's happening there? Talking to you. Hey, Alex, do you have any questions? Is there anything that you didn't understand that's going on in the process? Even though you're talking to Natasha and she just explained everything to you, I'm still checking in to make sure it's okay. So they help me do that. If I actually had to do each single step of the process, I wouldn't be able to.
Yeah, yeah. So you're basically managing people in the background and then just managing the client's expectations. Okay.
Correct. It's all about
Yeah.
micromanagement and making sure everybody's doing their job so that I can do the best that I can do.
So how many guys like you are at the business? Are you just at the top, like bringing in all the business, and then everyone else is underneath you, kind of like scrambling?
So I'm one of the managing members. We're a family business. It's me, my father, my brother. So my
Hmm.
brother, he handles all the underwriting. He is in charge of, he's the head underwriter, make sure everything goes in and out. He's in charge of our capital raise. So for any accredited investors that are looking to send us capital, he's the guy you speak to. You have my father who oversees all management. And then I handle all the loan officers, new business, marketing, making sure that all of our customers are happy, and so on and so forth. So between the three of us, we each divide and conquer.
Yeah, yeah, that's great. So now you told me that you were looking to expand. Now this is like a
Yep.
really loaded question right now because, I mean, you and I have been talking every month for the past year, right?
Yep.
And I've been telling you I got a deal on the table. I'm working the deal. Blah 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 blah. I can't get the numbers right. I can't get the numbers right. You know that I'm like, whether I'm a cheap guy, I don't know what you want to call me. I'm always looking for a deal. Um, it's been hard for me to find a deal. So I'm
Right.
looking at people buying stuff that I'm not buying, and I feel like they're suckers, right? I feel like they're paying too much for the deal. And then I look at a deal and I look at a guy like you, you're going to send out an appraisal, right?
Correct.
So what's your mindset? Like these guys are suckers or like you don't care or as long as you're getting your down payment, you're covering kind of your hedge, you know?
So
Um,
so go back a little bit because I think you cut out a little bit. I probably missed the most important part of the question.
so the part of the question is like, I've been having a hard time putting a deal together in the last year and a half, right?
Right.
And it's not on the lending side because that's usually where it gets sticky. It's on the seller side. The sellers are asking too much for properties. I feel like the market's at a height. We'll talk about Corona in the future in a minute. But I felt that way for the last year and a half. And a lot of the properties, like half the properties I've looked at, sold at too high of a number, or they're still on the market 1, 2, 3, 4 years later. So when people are coming to you with this stuff, like, are you just taking any deal because you have little risk in it? Like, I don't know. If I was lending money, I'd be like, dude, this isn't a good deal. I don't think you're going to be successful with it. Because you're obviously sending out
For
your own
sure.
appraisals, right? You're not trusting
Correct.
theirs, right? So how do you view this stuff?
So yeah, I mean that's a really good question, honestly, because that's I know you're going to ask me about Corona a little bit, but I'm just going to say this: some parts of the country right now don't feel it. They're in the same market as they were before, and that's probably where you're seeing because I know you dabble in New Jersey where prices are so high, people are overbidding. And in reality, what it comes down to is like, hey, in the end of the day, we're making sure that we're going to be able to get paid back in the day. So that means that if I can't get paid back, you can't make money off of the deal. Because
Right.
if you can't meet me, well, then you're already at a loss.
Yeah.
So that's where we're coming in to make sure that the deal makes sense. I can't tell you. I had a long conversation. I'll bring up this one deal that I was speaking about. I won't say any names. Pretty much, he was working a deal in Florida, and he's a contractor. So for him, he makes money automatically just from doing the work.
Yeah.
But now he brought a deal to the table that really, if I underwrote it over a 1 year term, he would not be making any money. He would be a loss of a couple $1,000. And I asked him, I said, like, is that really worth it to you? Like, are you really looking to do that? And his answer to me was, well, it doesn't matter. So I said, well, let me show you something. And I called up one of my wholesalers that I knew in Florida, and I said, hey, I said, I have a guy right now. He's looking to put it down a con. He's ready to sign a contract, but there's just not enough margins there for him. I want to show him something, a real legitimate deal. And he said, no problem, Max. I'll send you something. It's not the greatest, but if that's the case, he's going to love it. And right away, he was able to see a $30,000 profit plus the money he was going to be making. And he didn't blink an eye. He said, well, Max, it makes a lot more sense to do this. So, yes, we're going to be giving our 2 cents a little bit to kind of guide you. And at the end of the day, as long as we can get paid back and it makes sense that we can get paid back, we're going to do the deal. But I'm always going to tell you that. And every time I even send out any terms or anything like that, I'm also including an economic sheet, which shows you how much you're making. So in the end of the day, I'm not saying, hey, oh, you could pay me back, do the deal. You're only making $1,000 on. I'm saying, hey, look, dude, you're only making a 5% ROI. Is this really what you want to do? And let them make that decision.
Yeah, because being that we're at the top of the market price wise, probably historically, percentage wise, whatever you want to call it, and we're gonna see some ramifications. Like I feel, I'm so scared, honestly, of the next 5 to 10 years that I've been, double checking every number I run. And I think I told you, right? So if I
Yep.
want to buy a property, 50% of it has to pay for the property. Now, a third of the property has to, full has to pay for the property, right? So my numbers went from like ridiculous to like completely insane because I want to hedge myself and I want to be careful. I see guys having bidding wars on stuff, and so somebody buys a property now, spends $1 million on a 3 or 4 family. Now the market crashes, right? People lose jobs. Unemployment was at like what 30, 40%, whatever it was. Now it's at 20, right? You're not fearing that. You're not fearing that the unknown is out there. That like these people are gonna like it's gonna be another. It's gonna be worse than 2008, 2009, right? Were you in the game at that point?
So no, that's actually my biggest. This is the reason why I'm so excited now, because I wasn't able to be in the game in '07 and '08, and now that I can be, and I know what's to come, I just can't contain myself.
Well, I'm happy too because I always tell like a lot of people listeners they hear this all the time. I make my most money in a down market, right? Hands down, I almost sit out the rest of the 5 years because I don't want to compete against everybody. Because like the talks we have, oh, I got a property, I get frustrated, this and that. Fuck it, I'll just wait till everything crashes, then I'll pick up the pieces. But the thing is that from your standpoint, right? Like for me, I know what I'm doing. I know I'm going to have a successful deal. From you, you're lending to hundreds, thousands of people a year, and for the next 30 years, they're going to have to be able to pay you. Or if you're doing balloons, I don't know what kind of loans you're meeting these people with, but you know, you don't have complete fear of what may happen in the next few months. I mean, I know you guys raised your downs to what 35%, right? So
We,
that's you're
yeah,
hedging a little bit. So
correct.
you guys have some fear too.
Oh, of course. There's absolute fear in the market. There's no question that there's going to be a lot of bad. That's zero question. There is going to be a lot of bad. There's going to be the forbearances that are going on right now, that are on their mortgages that they're going to have balloon payments for. You're going to have divorces, downsizes, people that lost their jobs that never got it back, companies that had to close down, small businesses that closed down that can't open back up. There's so much that people are going to be hurting, but at the same time, there's also so much of an influx of money right now. So I'm sure you're familiar with all these stimulus programs that are going out there right now. I mean,
Yeah,
between
yeah.
the idle, the regular 1,200 check, which whatever, it's $1,200, but still, they're the government right now is just influxing the market with money. They're just
Mm-hmm.
throwing it out as easy as possible, so that they could try to avoid that. Now, if you ask me, I think that's actually a very smart idea. Why? Because first off, in every market, whether you buy stocks, whether you buy clothing, no matter what you're doing, even in the worst markets, there is a lot of profit to make. And in this case scenario, I would actually happen to say that flips are probably your best bet, because you don't know, because you're so uncertain of the future. But I can predict 2 months from now. I can predict 3 months from now, even a year, 2 years, 5 years. Now you're starting to get into unknown territory where, I mean, look, 5 years ago, no one knew coronavirus is going to be here.
Well, this is an interesting thing you're saying, because what's happening and I'm seeing is the government's putting so much money into the economy, right? They're printing a ton of money. You're seeing inflation. Like you try to buy a computer part, you try to buy a house, you try to buy anything, everything's out of stock because there's so much money being injected into the economy, right? It's driving the prices
Correct.
up. Okay, so
Correct.
what happens the minute that money gets pulled back? Okay, everything comes crashing down, right? So, like you said, you can predict 2, 3, 4 months, right? I'm with you on that one. So the flip is a
Right.
good thing, but like if you've got a five, unless you're selling your mortgages and stuff, but you've got, let's say, a 5 year balloon, and I know because I got caught. I got caught. I had my second 5 year balloon on a property, and 2008 hit, and my balloon was coming due. And the bank was just like, we're not going to lend you. And I was like, dude, I was like, I did 2 5 years with you guys. I never missed a payment. I have a full building. I have positive cash flow, the whole thing. They're like, too bad. Pay, right? And I had to come up with a balance or I was going to lose the building. And I never forgot that, you know?
Right.
And this is like when you and I talk, I say, give me a mortgage, dude, because I don't want to bet that in a year or in 5 years, I'm going to have to, go back out and look for money. And if there's no money out there, how much shit's creep?
Right.
You know. So
So
so so how are you heading against that kind of stuff?
very interesting point. So, I mean, really what it comes down to is leverage, 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 leverage. So, in the end of the day, we always have a collateral, which is the property, the real estate, which will always hold a value, right? Now, originally, before, I would say,
Go up with
I'm
inflation.
sorry?
So it'll go up with inflation, right? So it could
Right.
be worth. Yeah.
Correct. So where it comes down to is we use a rule of thumb of 65, where it's like, hey, you won't lose 45% of your value overnight. It just won't happen. Right.
Yeah.
So that's where we try to keep ourselves at a point where we're like, hey, we're going to leverage ourselves at this much so that if the worst case scenario does happen or the market does tank, at least we can sell and get out of it. If you had a balloon payment on a property and your balloon payment was $5 million, but your property was $10 million, it doesn't matter whether or not you can pay that off or not, or whether you can refinance it, because the worst case scenario, sure, it's not ideal, but you sell the property, you made a $5 million profit, and you go ahead and you buy another property with that.
Yeah.
So, in the end of the day, you're not in the worst case scenario. And that's what we're looking at. We're looking at liquidity, making sure that you can make payments. What happens if you have a tenant that cannot pay rent? That's a big issue right now because of the unemployment rates. So we're making sure that you have enough money to withhold yourself, because again, is buying real estate for everybody? It's not. Some people just can't do it right now. Is it going to be for them? Yes, eventually it is for everybody once you get yourself to a position where you're not at risk, right? It's all risk management.
Yeah. No, I understand that, and I just a lot of these questions I ask so it's clear to people that are listening, because most of the people who watch this show are new first timers or people that are looking for direction and advice.
Right,
And like I said, most of the guys in your position are bullshitting people in to catch them, right? And I don't really know
correct.
what the upside is. I don't know if they just, if they get enough people, they figure some people will get through, or they're getting paid for just bringing the guys in. I don't know how the model works, but I've seen it myself firsthand. And that happens even in the residential market. Um, so that's an interesting thing. So
Of
so now
course.
so now we're moving a little bit forward. So now you're expanding, right? And
Correct.
this is another interesting thing. Has this been in the game plans before coronavirus hit, or is this something because of coronavirus that you're growing?
Good question. Definitely a little bit of both. We're always the growing mindset where we just always want to move forward, never stagnant, because we believe
Always
it's
have
a
to grow.
treadmill. Always move forward. You're on a treadmill. So the second you stop moving, you're going backwards because someone else is moving ahead of you.
Yeah.
So we always had that mindset, but now that coronavirus hit, it definitely lit a little fire under my ass to say, like, hey man, you really got to push forward right now. Like, this is your opportunity, and don't drop it.
How long do you think this market is going to last?
I'm ready.
Yeah. So how long do you think this market's going to last?
Oh, how long do I
Because
think this market's going to last? I'm sorry, I thought you said something
yeah,
else.
yeah,
If you ask me, I am a big believer on the second that the courts open up, it's going to change a lot of the market that we're in. Right now, a lot of lenders are holding on to properties that they can't really do anything with. They can't evict they can't evict the tenants, and that's causing the landlord not to be able to make the payments, and that's affecting them, and they can't foreclose on them right now. So everyone's in a little bit of a standstill right now. So that's why the world is so happy-go-lucky, because sure, there's a lot of shit going on, but there's a lot of things protecting that right now. And the second that that disappears and people are able to foreclose, evict their tenants, there is going to be a lot more openings and things moving in the market. It'll open up more properties on the market, and then bidding wars will kind of slow down.
Can I stop
So,
you there because
you know,
you've touched on a lot of things, right? So
okay.
because I'm not sure if you're going to tell me it's going to get better or worse. Because if there's more properties on the market, the price is going to go down, right? And if there's more
Correct.
evictions, does that mean that there's going to be less people in spaces? Does that open it up for more people to move into those spaces, or like, so
Great
you know,
point. It
I
works
agree with
both
100%
ways.
what you said. Go ahead.
So it works both ways. No, you're exactly right. Like, hey, does it mean more? Does it mean less? So let's talk about first a place like Jersey, right? Jersey is right now, there's a max exodus happening from New York and other places where they're all leaving to somewhere that's easier to live, cost of living is cheaper, and all that stuff, right? So when a lot of more properties hit that market, that'll be what I would call a correction, right? Because now all these people that are looking to buy are going to have more options, and now it's the absorption rate, right? How many properties on the market versus how many people are buying. And then you have places like New York. New York is on a little bit of a decline right now, where property values are not as strong as they were. Days on market is higher. It's harder to sell properties. So when more properties open up, that'll also open up the door for a lot more investors to say, well, you know what? Maybe it's something that I can come and do because now the prices came down. And when you have a lot of them coming in and prices came down, well, hey, then you're on your way back up again. So that might be a lot longer of a process, but it should work in the right direction for us.
So
You
now
got to get
you're
worse before
you're
you get better, is what I was trying to say.
yeah, okay. So you think there's definitely going to be a dip in there.
Oh, for sure,
What
for sure.
Yeah. Now, not. I don't really. I know your business is mostly like residential and multi and stuff like that, right? You do commercial like outside of this type of environment. So how do you feel
Absolutely.
about that? Like, I'm mostly commercial, right?
Mm-hmm.
And I've always picked a tenant based on their reliability, right? So like
Mm-hmm.
I have dentists, I have like doctors, I have like, HVAC guys, I have ambulances, you know, businesses that are almost essential to a certain degree. Um, but I'm a little bit nervous because I only lost one tenant in this whole thing, one commercial tenant, and the guy was only in business 5 months. The rest of them stayed, and two or three of them are like backlog and paying me, right? And for people out there that are wondering what to do, like I basically took like most tenants, the few tenants that owe me like 1 or 2 months worth of rent, and I said, listen, I'll divide that over a 12-month period, right? So it's really easy. Just keep paying me your monthly rent and throw another $100 on top of it or 200, whatever it is, and we'll get you paid off by the end of the year. Or, at the end of the 12-month period. So everyone's cool with it. Money's starting to come back in. Right now, I have 100% of those tenants paying. Believe it or not, I rented that space the day the guy moved out. I don't know if I got lucky or whatever it was. But I look at it and I say to myself, okay, businesses, you hear Google, you hear Facebook, you hear, like, I got buddies that work in the pharmaceutical industry, like, they are not going back till at least the end of 2021, right, to their office space. Now, these are big corporations, they can afford to keep these empty spaces, but is there going to be expansion in the commercial market? Or are we going to start seeing commercial landlords like me having a hard time paying their mortgage?
Yeah. So commercial is a interesting topic, and what you said makes a lot of sense, right? You started talking about what specifically you lease to in commercial, right? You look for something, you look for qualified tenants, but what it qualifies for you is that their business is something structured that can last. It's an ambulance, they need to be there. But now you
Yeah,
start renting to restaurants and um, maybe a music store or something off topic, something retail where it's very generic, now you're at a risk, right? Now you could either be really, really good, right? Your restaurant could be working right now off of Uber Eats, making a killing and loving it, or your restaurant could not be adapting and suffering. So that's where the business world comes in, right? So I have a lot of friends that are in the business lending industry, which is merchant cash advance, where it's very similar to hard money if you would ask me, but for business lending.
Yeah.
And the way they see it is really interesting to me. They are still funding deals right now, but they're being very specific on which ones they're funding. And I think that commercial buying is going to be very similar to that in the future, because number one, a lot of businesses may adapt. I know a lot of companies right now that are going completely virtual, and they don't want to have office space and overhead. And many businesses need that interaction, that face to face, that, hey, we're here. Here's a retail shop. You could come visit me. You could come see me. You could come and grab my product and leave. You don't have to wait 3 days for it to be delivered. So there's still always going to be that need for it. And I think that it's just going to be more of a similar to what you're doing, which is just being conservative for now and really making sure that in the worst case scenario, what is my outcome, and moving from there. But I still see it being very lucrative. It's just I think it's going to be a big thing about seeing where the market plays itself out, which companies and which what do you call it, industries adjust and go virtual versus which ones don't. We may see new businesses come up out of this. I saw, you know what I
Yeah.
saw actually?
Yeah, of course,
I,
of course.
I saw a coronavirus essential shop where they only sell things for essential to the coronavirus. Like, crazy things are just going to pop up. You never know.
Crazy stuff. Yeah, I mean, like my dilemma is right now. You're not familiar with like my program. My program is like 5 pillars of passive income,
Okay.
and we talk about real estate being one of the pillars, and that's been one of my main drivers for the last 25 years. And for the first time ever, I'm looking at some buildings. We've been talking about that. And I sit to myself and I say, do I want to buy a building and use my money there? Or do I want to just put it in crypto and precious metals and just kick back and do nothing and make 5% a day, you know?
Right.
And I'm always a guy who likes to spread it around to hedge bets or whatever. But for the first time ever, I'm really debating like, and like I told you, I'm buying a really small building because that's like the fear I have right now. I got to tick that box. I want to pick up another one this year, but I'm also looking at it and saying I can make better money somewhere else, and it's 100% passive. And I mean, there's risk there. Don't get me wrong. There's definitely risk in cryptocurrency, you know. But I think the risk almost outweighs, the things. So I wonder if we're going to see a shift in investments as well, because of this. Especially being that, like you're saying, it's 35% down to get into a building, where this time last year I was putting 25% down. A couple years ago I was putting 20, right? So,
Wait, Alex, you got cut off.
it's a sizable chunk.
You got cut off. Could you
Yeah.
go back a little
Where
bit?
do you lose it?
You said
Yeah.
when you were saying about buying
I
a
was saying
building.
that, yeah. So I've been nervous about buying real estate right now, and I've never been in my entire life. Even
Right.
in a down market, I was always like, it'll come back, right? Even in a down market, even if you have a year or two that's tough, you're gonna make, because you're making your cap every year, and then you're making, you know, um, your property value increases or whatever. But currently, you've got things like for the last couple of years, the stock market's been returning 20% a year. So it almost made
Okay.
real estate look like, right?
Right.
Now you've got gold and crypto, and the stock market's still ripping. I think that's going to be over in a couple months. But once the stock market peels out, crypto and gold are going to go through the roof, right?
Right. Right.
And I saw gold go from like almost 1,200 to like literally 2,000 in the last 6 months. No commercial investment is going to do that for you,
Right.
right? So
Right.
this is where my fear is too. Like maybe I don't even buy a building this year, and I just take that money and I throw it into crypto and into gold, split it 50-50. You
Sure.
know, what do you think
Sure.
about
Sure.
stuff like that? I'm looking for your counterpoint on it. In a sense,
Yeah, of course. I understand. So I'll be very straight and honest about one thing though. I don't dabble in stocks or crypto, and I'll tell you why. I've learned enough about it to make up a decision about it. Now, don't just say that. Oh, I'm dumb for doing that, or whatever it is. Like, sure, I get it. There's a lot of ways to make a dollar. Me personally, I'm not about the high risk. I am about the what's my least risk and
Yeah.
best reward, and also has good upside, right? So now when you get into gold, one thing that could be a little bit tricky right now, and again, you might correct me on this, but would you say that gold increased so much because gold went up or because the dollar went down?
It's a good point. It's a really good point to bring up. You know.
Right. So the U.S. government right now is printing out so much money, and don't get me wrong, every other government is probably doing the same exact thing.
Yeah.
So we're going down with everybody as far as our values, but now you have certain things like precious metals and cryptocurrency, which now started to really pique my interest. There is no question about it. It definitely piqued my interest a lot more. But now, when you turn back to real estate, you have a product that doesn't get smaller. I mean, you can't create more of it. I can
Yeah.
find more gold.
Price goes up.
Correct, right. I could find more gold. I could create. I don't know if you could create more crypto. I could be wrong about that, but there could be
You
other
can, certainly you
sources.
can. Yeah.
Yeah, so all that could be created more of. But real estate, the world is only one size, and it's not getting bigger and it's not getting smaller. We may even be getting smaller if you tell me, because our oceans are dividing or whatever it is I read on about Africa on clickbait, but whatever.
Right. Great point, dude.
So, so based on that point, there is a saying in real estate that as long as you could hold on to it, you will never lose. And that has never, ever disappointed or been proven false. My father, back this was in I believe the 90s, when the blackout happened and there was all riots again, and pretty much very similar to what we're going through now, right? And he bought a piece of property for $200,000, and everyone told him that he should be holding on to it, rent it out, don't operate. He ended up operating his own business out of it, uh, and he ended up having to sell it. And it was the worst decision he ever made in his life, because if he turned around today, that property is worth $2 million plus for $200,000.
Yeah.
So we talk about, hey, we don't see those returns, but that's because we're not looking at a long enough period of time. The money is all made in the buy. So if right
Yeah.
now we feel like there's going to be a correction, there's going to be a recession, there's going to be a depression, whatever it may be, that excites me more than anything else, because I know that now would be the time to buy, and it'll
Everything's
only
going.
get better from there.
Yeah. The other thing there's two other things you missed.
Sure.
You can leverage
Oh,
with commercial real estate, right?
yeah.
I think that's or any real estate for that matter. I think that's a real strong point. And the one thing I've noticed too, because I spend a lot of time living in third world countries, right?
Right.
And I always look at the people who are wealthy, and they all own tons of property.
All of
And the
them.
one thing I noticed, from that is because when the economy is so unstable, the only stability is precious metals and real property. That's it, right? So they use it as a bank more than anything else. They don't really use it as like we use it as a tool to make money. They use it as a bank account, and that gives me a lot of faith in that sense that no matter how bad things can get, you're going to own property, and someone's going to need property to use, and they're going to pay you to use it. You may not get your great return on it or whatever, but that's it. And as things inflate, rent price goes up, and you don't have to keep up with anything, and property value goes up, right?
Right.
So there are some upsides to it,
For
and
sure.
you're right. And I'd
Can't believe
love
I
on a
missed that one.
to talk to you about I actually we're having this two things. I'd love to talk to you about crypto and precious metals and stuff
Sure.
on our personal time, but we are having a debate in a week or two, and we're gonna
Okay.
have a crypto guy on there, we're gonna have a stock guy on there. You could be the real estate guy if you want to be on there,
I'd be
um,
happy to be.
and that's what I'm saying. And you come on, and it's really about kicking it around. And it's
Hmm.
funny because I had these guys on about 3 4 months ago, and especially the stock guys, they fought me really hard on it, and they predicted a lot of what was going to happen. This was before Corona,
Okay.
um, but it's an interesting side note because one guy's a day trader, another guy's like an actual stockbroker, so they look at things differently. But yeah, we'd love to have you on to kind of fight for the real estate side because they'll tell you that over the last 50 years, stock has outpaced real estate percentage wise. Um, and that's another interesting point because they'll tell you like it's completely passive. You buy your stock, you sit back, chill, and you get your money. Um,
You
but
could say
again,
the same thing about real estate.
yeah. Well, I think real estate has on average has done like kind of a 20% return or something like that, and I think stocks are like 22 to 25 over like so many over what period. We can talk to them. We'll see what they say, but they
For
do have an
sure.
angle on.
For sure.
Um,
Yeah. I have a lot I could
I've
say
always
about that.
real estate's my passion, right, more than anything else, and I love the leveraging aspect because I can come to a guy like you, right? I save
Hmm.
up my down payment, I buy my place, then I take that money that I'm making from that place, I hand it to you again, you know, and you get me another place. And you keep doing that every couple years. And then, then like you said, when you cash out, not only are you making money every year on it, right? You've got that return on investment, which is usually somewhere in the 15 to 30% range if you're good. And then when you sell it, you've got the return on that property. Plus, the other thing which you kind of alluded to the other day is even if I don't want to take my cash, I can borrow against the property, and that money's sitting there anyway, right? I can't do anything with the money that's in a property, but I can leverage it to buy another property, right?
Correct.
So, and I think maybe that's something, that's interesting and has kind of piqued my interest in this market where you can kind of spread a little bit, not, I don't want to say thinner, but you can kind of mitigate a little bit of needing that extra now 10% that's needed.
Sure.
Um,
Yes. I mean, that's the cool thing, real estate, it doesn't matter what kind of market you're in. It really doesn't. There is always an angle that is very lucrative in that market, right? So today you might say, well, you know what? I'm scared of buying and holding, but there's four other facets that you could do to make money in real estate. Because right now sales are so hot, you could be a realtor, right? So you could be the broker side of it. You could be the lender side of it because everyone right now and their mother is looking for cash because they want to ammo up for the market. So they're all refinancing. And that's really 90% of my calls nowadays is, hey, I want cash out of my property. And then you have the fix and flip, right? So, I mean, have you seen people making 80, 90, 100, 120% of their money in 6 months?
no,
Not,
it's ridiculous.
that's ridiculous. But they're doing it in real estate by doing a fix and flip.
Yeah.
Because and I'm talking about cash on cash investment, right? Because like you said, leverage is the main key factor of all here. And if I could leverage myself, a hard money lender, at 90% of my purchase and 100% of the rehab, I have 10% of my purchase price in here. And now I'm going to go ahead and sell it for a profit, and that
So the
profit's going
cash
to
out,
bring me double or more than of what I put into the property. That's amazing.
can we talk a little bit about that?
Yeah, for sure. A
So,
lot of
so
yeah. Go ahead.
no, I mean, maybe explain to the audience exactly, what the cash outs are.
For sure. So right now, for example, John Smith owns a property. He bought it, 5, 10 years ago, and now it increased in value is one thing. So he might have bought it at 500. Now it's worth 550 or 600, whatever it may be.
Talking
He's
end users, talking landlords.
say again.
We talking like end users, like people using properties, or we're talking like landlords that are just, you know,
So you could do this both ways. It works as a homeowner and it works as a landlord. Me personally, I only lend to investors. I don't do any primary properties. It is something that we're looking to get into, and we do have something coming in the next few months, but not at this time. So right
okay.
now we're just talking about straight landlords. They own a property. They collected rents. They're cash flowing. Their property value increased. They're in a great position. And now they see all of a sudden now they see the market today and they're like, Max, I need to get involved, but I don't have enough cash. But I have my property, maybe even two or three. So we'll say, hey, you know what? Absolutely, no problem. You owe less than 65 or whatever it is percentage. We'll give you up to 65% of your value. So if you leverage 50, you now have 15% cash out, right? And now you could take that money, buy another property with it, and do the exact same thing you did with that one. And if you wanted, you could even cash out earlier, which is 12 months. I wouldn't call it a cash out. At that point, it would be more of a rate in term with the current leverages. So you'd be able to at least cover that debt, take that money back, and reinvest it into the next property. So you're constantly doing the same thing. But right now, what we're seeing is a lot of people just want to have cash. whether it's for security, they want to know that them and their family are okay and they don't have to worry about something if God forbid something happens, whether it's for another property that they're looking to purchase, whether they just want to get ready for whatever market comes in, whether they want to invest in crypto, whether they want to invest in whatever it is. So I could technically still leverage myself and invest in certain stocks and crypto and all that stuff. But obviously, when you're leveraging your property, you're going to be a little bit more careful. So that's why people usually choose real estate to go into, because it's a little bit of a safer investment as far as risk wise.
So if I hear you right, you're not asking them where the money's going.
Correct. We don't source those funds. We used to in the beginning of Corona, but we're not doing that anymore.
So now let's talk about a couple scenarios. So I've got you said a $1 million property. I want to take 15% out. That's 150,000. I take that money. I use it as a down payment for the next building. You're obviously aware because you're giving me the next loan,
Correct.
right? Now you default on that second that new property. What happens to the primary property? You have to pay that 150 back, or you lose
So,
both in foreclosure.
so you leverage the first one, and now you're
Yeah,
buying a second property with it, and
and
now
you're
you
using that.
defaulted on the second property.
Yeah,
So here's the thing, Alex. We are not going to lend you that first 150,000 if your first property would not be able to cover your principal, interest, taxes, insurance, and capex. So that means that we're accounting for vacancies, we're accounting for maintenance costs that you may have. And now we're not only saying that it has to be at a 1-to-1 ratio, we're saying, hey, it has to be at a 1-to-2 ratio. Why? Because I want you to cash flow. So not
yeah.
so not only should you be covering your expenses, but you should be cash flowing. So if you
So the
defaulted on the
first property.
second one, you lost the second one. But that first one is still making payments because you're able to cover it.
Yeah, yeah. Okay. All right, that makes sense. That makes sense. So that protects actually the lender and the borrower.
Correct. Correct.
Yeah,
We always want to protect the borrower. If we leave our borrowers at risk, we're at greater risk. So at
yeah,
the end of the day, we're the only two people who don't make our profits till the deal is done, signed, sealed, delivered, and sold.
yeah,
Everyone else got paid. The realtor got paid. Your title company got paid. Your wholesaler got paid. The only two people stuck in the deal is the lender and the investor.
yeah. Let's talk a little bit about that because I know in the past I go after loans, and a lot of guys in your position they always skirt their fees, what it's going to cost you, the closing, everything, and then like day before closing, they're like, oh, by the way, drop off a 10K check, for my services. How does it work in your world?
Yes, I mean honestly, that's usually the horror story we hear from people that come from any other place. It could be from anywhere. So one thing that we do, very, very particular about this, is because I never want to have those scenarios. We actually stand by the fact that we are certainty of execution lenders, which means that when we give you a term sheet, it doesn't mean that we just looked at it and it worked. It means that we actually looked into it. We did our due diligence with you. We spoke to you about it. We went over the economics together, maybe even looked at the comps together at some point, and are now giving you a term sheet. So we're doing as much work on the front end so that that doesn't happen. So at the end of the day, the only time we'll ever change our terms is if the appraisal came back lower than expected, or B, if something that was told to us was not accurate.
Yeah. Okay. That's cool. That's
So
cool.
so yeah, I'm a big believer in 5 minutes on today will save us hours tomorrow, and 5 minutes today will save us hundreds of $1,000s tomorrow.
Yeah, yeah, of course. I mean, I've always gotten the impression from you that you're in the business to be in business with your borrowers on a long-term basis. Um,
Correct.
you know, yeah, and I mean, listen. I think any good business person thinks in that model. It's always about the long-term relationship. I mean, I remember the first time I talked to you, you said, "Listen, we'll run your stuff, and then once we run your stuff once, like we can go quickly every other deal after that." um, which is important because that's what it is. Like, commercials like what, a 90-day close or something, um, and any of that stuff is between 60 and 90 days, and it's a long, frustrating time period, right? So if you can make it quicker, everybody saves money, saves time, and the turnover is where I think most of the risk usually is. So
Yeah. Yeah, you're not wrong
yeah,
about that. I mean, the relationship is really where it is. I mean, I can tell you that the first person that I ever sold to a house to, not only did I lend him money afterwards, not only did I do a fix and flip with him, but I'm actually also a partner in real estate with him. And I think I mentioned that to you, Alex, to you too, Alex, is that like, hey, you're pulling up deals, you're doing a lot of different things. Like if you need capital on a not just a debt side, but from an equity side, I would feel comfortable doing a deal with you. And that's how we treat all of our clients because if somebody's doing something good and we can get involved with that, like why wouldn't I be dumb not to?
Yeah.
All right. I got to
Yeah.
stand by my clients. I believe in them on the debt side. What, I'm not going to believe on them on the equity side?
Yeah, no, for sure. And I mean, I think that's why you and I have like kind of gravitated towards each other because we work in the same type of mindset, same type of world. Um,
Right.
so so now I think we covered a lot of like good topics. We got about 10 minutes left. Is anything that we missed? Anything that you want to talk about? Any promotions you're running? Any deals you're offering? Um, you know, the
Yeah.
stage is yours.
For sure. So yes, so a few things I would mention is that if anyone, we are looking to grow, which is something we spoke about. So if anyone is looking to get involved and get deeper into the lending side, get experience with it, so maybe they could invest themselves, build capital. We are hiring loan officers. So anyone interested, please feel free to contact me. We do hands-on training, we have back-end support, all that kind of stuff. So I'd be happy to talk more about it with you and see if it even is the right fit for you. And additionally, anyone here who does a deal with us till the end of August, we're offering free appraisals. So that means that for your first deal that you send to us, we're going to give you a free appraisal up to $500. So the way it works is you front the appraisal, you get it credited back at the closing table. And yeah, so anyone, feel free to take advantage of that. Call me out on it. Looking to give them away.
Great. Now, let me interrupt you. Do you do any affiliate programs? People want to refer, clients to you? I mean, I know
Absolutely.
you're
So
a client
go
advocate
ahead.
here, so
I'm sorry. What was that?
I said I know you do affiliate programs, but I'm asking like if you got something like that. So
Yes, so I have two versions. One is the broker program, which is if you are, involved in lending and you want to just, send files over, we can pay you up to 2 points on every deal. And then you also have the referral program, which is just, hey, look, I'm involved in real estate, but I'm not trying to do loans. I'm just trying to send you someone's number and get paid for it. We'll do that too. So we're unregulated. We're not we're not federally backed or anything like that. We're all private money, so we don't have any of those regulations. We're allowed to give referrals. So by all means, if you send us clients, I want to give you guys money.
that's awesome. That's awesome. So why don't we talk about how people can reach us? Website, socials, whatever.
Yeah, so we got our website, which is expresscapitalfinancing.com. You'll see all of our loan programs there. Now, one thing about us is that we don't hide. We share all of our terms out there. A lot of lenders, you got to call up, find out, da da da. I'm not in that game. We provide service, and that's why people come to us on top of our really good programs. So we put all that out there for you guys. You can see our fix and flip rates, our buy and hold, portfolio lending, which has also been a really big hit nowadays that everyone's trying to do their cash outs on multiple properties. You can also check me out on Facebook at Max Chera. My email is max@ecfnow.com. That's max@ecfnow.com. I mean, hit me up with my cell phone number. Like I'm an open book. If I could put it in the chat, maybe I would be happy to put all my contact info in there.
We got that.
Okay, cool.
Yeah, awesome, awesome.
And
Any
yeah,
last minute? Go ahead.
anyone who needs a deal calculator, they're not sure if the deal is profitable, they're looking at something, they're trying to figure out the underwriting guidelines. I have a deal calculator on my website as well. If you go under the business resources, you'll see deal calculator. It asks you to put in all the information, and at the end of the day, it'll give you your economics, which is pretty much what your profits are, what your loss might be, what your cost is. So feel free to use that. And if you want to go deeper into a deal, call us. We're here to talk. It's not, one thing I'll say is that like, uh, one of my pet peeves is when I speak to somebody and it's like, oh, well, if you're not doing deal today, don't talk to me. We don't believe in that at all. Like we said, we're into the relationship. So we're looking to build that with you. We're going to explain things to you, show you why we're saying what we're saying, not just tell it to you and tell you take it or leave it. So we're in the education business, the service business, and it comes with money.
That's awesome. That's awesome. So let's recap like the deals that you're doing right now because I know we touched base a little bit on in the beginning.
Okay. So we are doing right now hard money loans for 1 to 4 units. That's our bread and butter right now. We're doing hard money loans for multifamilies. This is something that was paused for a while because multifamilies were a big risk, but now we're seeing that a lot of people are doing all right. It's not a big deal.
Multi
Um,
over.
I'm sorry.
What do you consider multi over four?
Anything over 4 unit would be considered multifamily. So we're starting. We're funding those. We're giving high leverage again. We're at 80 LTV on the purchase, 100% of the rehab. We're also doing your bridge loan. So if you just have a property that just needs a bridge, you're not trying to get a long-term financing and pay a prepayment penalty to get out because those could be pretty expensive if you're planning on selling. So we'll give you a bridge loan. We are doing also commercial mortgages. So anything long-term, whether it's a 1 to 4 unit, whether it's a commercial building, industrial, storage facility, mobile home park, anything long-term, we love. Um, And I think I touched. A new program we're doing right now also is transactional financing. So
What's
all
that?
you hold, so for the wholesalers who are looking to buy a property and sell it. Now, there's two reasons why you would need to close on it. Number one is you may be in a state where you cannot assign. Well, I'm pretty sure you could assign everywhere, but they won't allow you to. You don't want to show your profits to the buyer that you're coming across because usually the lender is going to ask for the A to B contract and the B to C contract. Um, we will give you the money to close where you have a buyer set up so that you have a seamless process.
Yeah.
So you're closing with us today. We're giving you the money. That buyer's coming in an hour, 2 hours later, whatever it may be. He's signing the documents and he's selling to you. Our money comes back within 24 to 48 hours. We're happy. And there's no interest on those. It's just an origination fee.
Wow. Pretty good deal. A couple questions on those hard loans. What are the length of the term? Up to a year, up to three. What
So
the
we
term?
give 12-month standard. We will offer up to a 3-year loan when it comes to the hard money. But even if you get my 12-month program, my term, you're going to also have a free 3-month extension. So if you're in a bad situation, we're not trying to push it even further. So we're going to work with you on that. If you need an additional extension on top of that, it's only a 1% fee, not a 2% like a lot of people charge for the first one.
Mhm.
And all of my long-term products are 30-year amortization. So even if my fee may be a little bit higher, I'm doing two things. I'm closing quicker than a bank would, and two is I'm amortizing it over a longer period of time, which in the end of the day may keep your monthly payment below a bank's, or
Yeah.
it would even potentially mean that you're maybe a little bit lower, but you have a seamless process, and you may even get a non-recourse deal where you're not liable. Whereas with a bank, you're always liable.
Yeah. Yeah. Let's talk a little bit about that. What's your close like? You saying quicker than the banks? Because I know the banks they're like 90 days if you're lucky.
If you're
Um,
lucky, especially right now, because right now they're
yeah.
all backed up. So normally a bank would take between 60 to 90 days to close. Right now, I'm seeing a big delay. We're closing in 30 to 45 days on our long-term products. On our
Yeah.
short-term products, we're able to close within 3 to 7 days for a repeat client, and I'd say 7 to 14 days for a brand new client.
Now, when you say short term, you mean like the hard stuff, right?
Correct, the hard money. So whether it's a fix and flip, a buy, rehab, rent, refinance, repeat, whatever it may be, anything short term.
Now, all your hards are interest only.
All my hards are interest only, and we even have an interest only right now for our long term.
Really? Wow. I haven't heard of those in a long time.
So we're doing
Um,
those for the portfolio only, and you do have to be approved for it. It's not just something that we're giving out to everybody. It's really for seasoned investors because they really know how to play with that to make it work for their benefit and keep themselves out of risk.
yeah, yeah. No, that's a talented thing for sure. Cool, cool. So the only thing you're not lending on is the mixed use.
Right now, that's the only thing I'm not lending on is mixed use, but we are doing it for the long term, just not the short term.
So with a few minutes to spare, if you want to get into it, because it's interesting to me. Like I'm a big commercial guy. I started getting to mixed use about 3 4 years ago. because I feel like it's a good hedge. Um, you know, commercial is a little hard to rent. Residential is easy. You know, they kind of inversely relate to each other. When the housing market's down, rentals are up. When the housing market's up, commercial's up. So you kind of like, I feel like I'm starting to feel like it's the best of both worlds. So why
Right.
would you be afraid of it, or why would the lender not want to lend on it?
I mean, so it comes down to the short-term risk of it, whereas like we feel that yeah, commercial is still a good product, but it's probably going to hurt right now more than ever. There's a lot of businesses that still can't be open, so you're still putting yourself in a position where you're saying like, hey, if you the investor can't rent that mixed use property, or
Not going to make
there's
them.
maybe a lack of buyers that are interested in buying the mixed use property, it could affect them more. So it's more of a we're not sure where it's going. We could be dead wrong, and you could be absolutely right. But that's just a personal preference at that point.
So let me take it one step further then. So the so you have fear in the commercial side of the mixed use, but why aren't you fearing any full commercial properties? Because to
Oh,
me it's almost like,
we're not doing hard money for commercial properties right now.
oh, you're not. Oh, okay, okay. I
Correct.
misunderstood. Okay,
Yeah, yeah,
yeah,
yeah. No. We're afraid right now for the short term commercial. Long term, I think it's a good idea. But on the short term, you may be better off in the residential side right now.
yeah, yeah. So my final question is you know I've dealt with a few hard money lenders over the years, and there's this one company that I've used in the past, and they'll give you the hard and they'll guarantee the mortgage once you're out of the hard. Do you have anything like that in your program?
I can't say that I can guarantee the long term.
Mm-hmm.
And I would think to say that anyone that does offer that, unless it's their own money and they're putting that on paper and signing it to you, would probably be a little bit ahead of himself, because in the end of
Okay.
the day, the mortgages rely heavy on the secondary market. As were you watching the secondary market when coronavirus happened in March, or maybe even early April? No, it
Yeah,
was
of
at the
course.
end
Yeah.
of. So that whole secondary market just crashed. So many of those companies right now are down under and probably never coming back. Some of them are on their way back. So some people took a really large hit with that whole impact. Um, so the secondary market. Where was I getting at with this? I'm sorry. What was the main question?
The question is like, you know, I'm you
Oh,
know, because a
right,
lot of are going to do a hard loan, roll into a mortgage, and that's like those are like 3 months to a year of a real stressful time, because you know you're buying a property that's empty, you're rehabbing it, or you're getting your tenants or whatever, and your road's not over until you're into that mortgage. And you know, like you said, we'll extend you whatever you said, a month, 3 months, whatever it is. You know, because it's scary. It's scary to be in that, because some guys will only give you 6 months, right?
correct.
So, you know, you do all your work, you get your building rented out, and then you can't get your mortgage. And now you're like, shit, I did all this work, and now I got to sell the place or whatever. So you're saying that, you know, no one should really be guaranteeing you the mortgage side of it.
Yeah, I mean, it's a little bit foolish to say that, because if you were in a hard money deal in January and March you decided that you were ready to refinance and you went to that lender, I can almost guarantee you he would not give you the same terms that he offered you day one, because he can't. It's almost impossible, right? Unless it's his own money and he's saying, "Hey, I'm going to convert your current loan into this," then sure, no problem, that makes sense. But unless
Yeah.
he's willing to say that, it's almost impossible. So,
Well,
uh,
I feel these questions because I'm separating you from the rest of the dudes, because this is stuff that I've come across many times. And you know, the one thing I always tell people is like the hardest part to me in real estate is getting that loan. And until you sign at that closing, I tell all my clients and all my students to keep looking for money and looking for money and looking for money, and go to a lender. Keep going to lenders, because you go to 20 lenders, it'll turn out to 10 lenders, turn down to five, and then, you know, same thing here. And, you know, lenders will tell you anything you want, like something like this. Oh, we'll lend you the hard. Don't worry about it. If we lend hard, that means we'll turn you into a mortgage. Oh, okay, great. No worries. I'm going to go with this guy, even though he's 2 points higher, you know?
right.
And then you're left with the bag, the bag in your hand.
Right. It's more of a play. Really, it's all a play on how they're doing it. They're guaranteeing it in a way where it's really just their word saying that, hey, your deal is going to work out. And unfortunately, I don't think that a lot, not every lender spent as much time in real estate and and invest themselves and things like that. So it's hard to really just take it verbatim. Look at who you're talking to before you take it, word for word. Test them on it. Ask them to, hey, what have you lent on? What have you closed on that you've converted? And what I always do is I always tell everybody, like, hey, right, when you're in a deal, what I'm going to do for you, if you tell me up front that you're looking to refinance, I'm calling you every single month and I'm telling you, hey, based on today's rates and where everything's at, this is what you would look like today. I'm doing it for two reasons. One is for myself because by doing that, if they're ready to refinance and I gave them a good deal, they're going to call me and take it. But number two is because now they have that information. That information is valuable. They can do something with it. They can either decide to make a move. They could see that my rates went up from last month, and they might say, well, wow, I really got to push this project forward because if not, my rates could go even higher. Or they could see rates went down. So it helps them really get a pulse on the market and where they are with their property. So I'm never guaranteeing it. What I'm saying is hey, I'm going to follow up with you throughout your entire process and let you know exactly where things are so that when you are ready to refinance, you are ready, right? We eliminated a week of the process and now we have terms ready to go. All we have to do is say, Max, push the button.
Yeah.
Speed, time kills all deals.
100%, man. 100%. And I appreciate you coming on. I don't know if you have anything else you want to add. Maybe recap your website, your contact or your socials one more time.
For sure, yes. So our website is expresscapitalfinancing.com. My Facebook is Max Chera, same as my Instagram, Max Chera. You can find me pretty easy on there. My contact, you can reach me on my cell phone, 646-666-3988. Again, 646-666-3988. So reach out if you have questions, you're unsure. I'm happy to talk with you, give you as much advice as I can. I'll always promise to be real and never, I always try to under promise and over deliver. And that's been working real well for me.
Awesome. Well, I can attest you're an awesome dude. Thanks for being on the show. We hope to get you back in a couple weeks when we have that round table.
Absolutely.
I found this to be super informative. A lot of great info there. And thanks again. And we'll speak real soon. All right.
Absolutely. Thank you again for the opportunity. It's always a pleasure to, touch base with you, and we'll do a lot to come.
Let's do it. All right, man. Stay safe and healthy.
You too, man. All the best.